I'm Keith McCullough, and welcome to day 2 of our Investing Summit. It's my pleasure to welcome in studio Vivek Ramaswamy. Thank you for making the time to be here. It's going to be an interesting conversation.
Yeah, I've been looking forward to it.
Yeah.
I'm excited to chat, and congrats on what you've built. It's great to be here with you in person before we head to the city.
I appreciate that. We've never met before. We've never, for everyone, we've never had a real conversation before or a conversation.
Yeah, exactly.
We just learned that he has 2 kids, I have 4. But I was doing my, we don't have a broker dealer, we don't have a bank, I'm not a Republican, I'm not a Democrat, so let's just put that on the table. So I do independent research. So I'm doing independent research on Vivek. So I realized, okay, it's pronounced Vivek, it's not Vivek. I had to get some of these things.
Basics.
But going through your history, I couldn't help but, be impressed. There are a couple things that jumped out right away. One, I couldn't believe how much younger than you, you are.
How old are you?
I'm 49.
You're 49. You're a young guy too. I'm 38.
I was like, wow, this guy, what he's accomplished, and he's a 1985 birthday, is amazing. And 2, he's not a hockey player. So I was like, he played tennis, and he actually played at a very high level. So I wanted to take it back, kind of to Cincinnati, Ohio. And how did that work? Like, you were a student athlete. I didn't know that.
Yeah. So I was a competitive tennis player. The time that actually came up, it's an interesting story. It led to probably a lot of my perspectives even was, I think a little bit of a rougher patch we went through economically as a family, where my dad, he worked at the GE plant in Evendale, Ohio. This is in the 1990s. Under Jack Welch's tenure at GE. And you might remember Jack Welch was famous for a lot of slash and burn. Say what you will, good or bad, that's a big part of what he did.
Right.
One day my dad goes into work. They say, look to your left, look to your right. One of you is going to be left standing of the 3 of you. Well, that was a big jolt to our family because that was the bedrock of economic stability. He wasn't in the higher up management ranks, but he was an engineer. And that really forced our family to make some difficult decisions. What my dad ended up doing was going to night school at GE. GE was where he was working during the day. They had a shortage of patent attorneys, so he was able to go to Northern Kentucky University Law School for 4 years at night.
Oh, wow.
But anyway, what does this have to do with my student athlete?
Well, a little preview of your future there was right there.
Actually, you've really done your homework. It's interesting how that works, right? Like father, like son.
So he's an engineer and he went to law school at night.
At the same time, yep.
Oh, cool.
And that allowed him to keep job stability at GE. But my mom was then taking care of my younger brother and I, who were 4 years apart. And we couldn't do soccer games and basketball games in different locations. So she says, we're consolidating to one sport that you both are playing, and that's tennis.
Really?
Yeah. And so that actually got me focused, and my brother especially, who was 4 years younger than me, who ended up being much better on tennis, because that was one place where she could take, in a pre-scheduled way, both of us at the same time. And he actually grew up playing me, who was 4 years older, so he ended up being really good.
Yeah, that's
like in the juniors, he was like in the top 5 in the country a couple of those years. I was never in the top 5, but I was nationally ranked as well. And so that was part of how I became, I guess you would call a student athlete in a home that definitely prized academic achievement. That was always, as you might imagine, for many immigrant and first generation households, it's a common value set focusing on education and achievement. But sports achievement was also part of that mix. And so we were in a household that prized winning, prized achievement, especially in the classroom, and said you didn't have to apologize for it. And part of what probably motivated my parents and even our family was that it was probably a positive in retrospect, that sense of insecurity or the lack of total security, right? The idea that you have to strive, that you have to work hard, that you have to do whatever's required to make your way and to provide yourself and your family stability. That was almost woven into my own upbringing and probably gave me some of the hunger that I had as a capitalist later when I left college.
Yeah.
I'm thinking my parents wanted me to be a doctor, an engineer, or have a stable career. Yeah. Thinking back to this, who's this Jack Welch guy that had this much decision-making power that impacted my own family? How does one pursue that path and what that looks like? And that probably led me in the direction that I went.
Yeah, I mean, reading it, now it really resonates with me. I mean, I'm son of a firefighter. And had
Where'd
to make it at Thunder Bay, Ontario, which if you go to, ironically enough, my first real girlfriend in America, too much disclosure, is from Cincinnati, Ohio.
Is that right?
So when I went from New Haven, which I thought was the industrial mecca of the world, from Thunder Bay, Ontario, like 7 hours north of Minneapolis.
New Haven where?
New Haven, Connecticut.
New Haven, Connecticut.
Right.
Oh, so we have a lot of cross paths.
Yeah, exactly. So I started
Cincinnati girlfriend, all right.
Yeah, there you go. And I did the Skyline thing. I got indoctrinated, but it's not a town like Fairfield County.
It's not.
No. And you had to grind through this. Was there a point in your academically, I'm assuming you had great standing because you went to Harvard, but I mean, I had the lowest SAT score at Yale, so it doesn't necessarily mean you had, because you're a good athlete. But was there a moment in your teens in particular where you had any moments of like real adversity as a competitive athlete that changed you?
I would say yes for moments of adversity. As a competitive athlete, yes, I would say so too. I think that there were several moments where, look, in my freshman year, I made the varsity team, but I was one of the two, young guys on the team. Yeah, I think that was a good experience. But it's mostly seniors that play on the varsity team, and I'm a 14-year-old freshman who was also particularly academically oriented, which was a little bit different than the guys who were seniors on the varsity sports team. But they kind of enjoyed me a little bit in that sense too. So I think were there moments of adversity would probably be an overstatement, but were there moments of being pushed a little bit by people who were older than you from a different, little bit of a different orientation of where their focus was? Absolutely. I think was there, moments where there were probably moments where I could have broken through to the ranks that actually my brother ended up reaching. And I was maybe within striking distance, but the reasons I lost a couple of those key matches that would have stopped me from going to like really the top national level of competition were probably psychological in nature. I mean, really, I was probably a guy who rounded up in beating players who had more natural talent than I did on the tennis court, may have even been a little bit more naturally, innately, physically athletic. But I think part of my advantages was staying power. I was a consistent player. I would, have a versatile game, throw in some moon balls when you needed to, do whatever you need to win. There's an old I think it was a John Newcomb expression, either you win or you leave blood on the court. I learned that pretty young, and I took it pretty seriously, and so you'd either win or you'd leave blood on the court. But there were a couple of those matches that I still look back at to say that you're within striking distance of achieving what at that time would have been greatness in my pursuit, and fell just short of it. And the sting of that stays with you for a long time, right? To some people it might sound trivial. Okay, you're talking about sports when you're a teenager. What does that have to do with anything? But I think that sting of putting in the effort, understanding that you had already punched above your weight, but you were really close to achieving the goal you were going to achieve, but then just fell short. That ended up being, kind of the beginnings of a chip on my shoulder mentality that kind of came up a few more times over the course of my career, where I believe in doing big things. I believe in punching above your weight, not just on the tennis court, but in anything you take on doing. I got a pretty good piece of advice, and I've heard it in different forms along the way, where it takes about as much effort to do a small thing really well as it does to do a big thing really well. And so if life is short and you're given a pretty short time on this earth, you might as well do the big thing and do that as well as you possibly can. And so anyway, those were some of the lessons that I took away from being a young athlete that may have nestled somewhere in the back there, filed away somewhere in my brain that, motivated me to take steps as a young adult as well.
Well, there had to be. I mean, chips on shoulders are good, especially for people who are really like world beaters. So that also doesn't surprise me. So when you made this transition, and by the way, I didn't mean because you're younger than me that's just like tennis, like I'm the older player. I mean, it's just like I was just kind of embarrassed that I'm getting a little. I was like, man, I feel old now. But
you look young, man. So you're doing well.
Thank you.
Keeping it vigorous. Started this thing when did you start Hedgeye?
15 years ago.
Okay, so you were in your mid-30s when you started this operation, and here you are today. So.
I don't have I didn't have a gray hair on my head, but there is a similar so I went to Yale, you went to Harvard. After that, you took 7 years, and again in an environment that I'm very familiar with.
Yep.
I'm not familiar with the firm, but 7 years or thereabouts.
Yep.
You went in. Were you an analyst that just started to do really well and got made partner? Is that how it kind of worked?
That's exactly how it worked. Yeah, I mean, I was a very lowly analyst, got my job coming out of Harvard. I studied molecular biology in undergrad, thought I was perhaps going to go to med school or an MD, PhD track, pretty academically oriented, graduated at or near the top of my class there, but decided to take a different road than many of my peers who did pursue that MD, PhD track. I think that the amount of time it takes in the lab to make a discovery that has an impact on humanity was going to be too small of a portion of my total lifespan that, while I respected the people who did it, that didn't feel like the right fit for me. Versus getting into the world of biotech investing at that time. Right now it's become normalized for anybody who's doing biotech investing to have some scientific acumen or background. But back in 2006, 2007, that was a novel idea, and the idea that you could generate some alpha from being able to have real domain knowledge, which I think was true, certainly back then, was real. And so this firm was dipping its toes into biotech, brought me on. It was founded by physics majors, mostly from Harvard actually, but who recruited on campus. And I said, this is a lot more intellectually stimulating than even just the time horizon sitting in the lab, running experiments that went pretty slowly through the passage of time. So I started as an analyst, ended up having early success. 3 years in, I do get itchy once in a while, right? A little restless. So 3 years in, I realized that I had been such a science-centric person, but I had this itch for law and political philosophy that I had not fully scratched while I was in college, and I kind of regretted that. And so I went to my bosses at the hedge fund, and I told them that, hey, listen, I'm going to, it's been a great 3 years. My learning curve has started to flatten a little bit. I'm going to spend 3 years in law school. I had a seat at Yale waiting for me, and so I said, I'm going to go do that. And I learned a pretty good lesson by doing it. They said, keep your job, and you can even have some autonomy, do it from New Haven, look at your own sleeve of investments.
Really?
And is that something you're open to doing? I said, absolutely.
That'd be great.
That sounds like a best case scenario. And the funny story, and I'm not even kidding you, is those 3 years ended up being certainly my 3 most successful years during my 7-year tenure as a biotech investor, outside of the inner working of Midtown Manhattan trading floor office, separately as a solo operation. And let's just say that there were some major successful investments that there were contrarian investments that bucked the trend. The consensus investment in the biotech world was that one particular mechanism of action, nucleoside polymerase inhibitors, were not going to be a viable treatment approach for hepatitis C, and everybody else was going in the direction of protease inhibitors or other mechanisms. For a host of reasons, with a lot of research to back it up, I said, no, that's the wrong way to go. This is actually where the future is. Those ended up becoming some of the best-selling drugs of all time and some of the largest acquisitions the biotech space had seen, and my firm ended up being the top shareholder of multiple of those firms. And I was the person who led those investments. And so that allowed not only the firm to be successful, but me to earn, let's just say, for what my family would have been unthinkable levels of wealth in my mid-20s while I'm in law school. That, to me, was the first version of living the American dream that also then gave me the latitude to do the things that I went on to do as a true entrepreneur, not working for anybody, but striking out on my own in the years that followed.
That's, and again, I don't know, well, I do know that plenty of what we read in Wikipedia is fake news, but as you well know.
Yeah.
But like.
Especially if you've entered politics.
Exactly. And I'm not concerned about the number, it just resonated because I know how much we can make and how much, if you're doing well and you're a young gun at a hedge fund, making 10, 15, 20 million bucks is, for guys like us where you and I came from, that's a lot of money.
Oh, I mean, that's would have been unheard of for my family.
Right.
And I'm doing it part-time while I'm in law school,
exactly.
which was remarkable. But it shows that if you have a skill set and you're able to put it to use, believe me, whatever I got, the people on the other side of it got a lot more than that. Who hired you, and that's the beauty of capitalism, and that's the way the system works. And I think that was something that gave me an early appreciation of the fact that capitalism is a just system that allows you to gain only an amount that is more than you would have had, but less than somebody else gained as a consequence from doing business with you. And that's a beautiful system that gave rise to, I would say, the modern American success story that this country has been over the last 250 years.
I mean, there's entirely a different understanding when you lived it.
Yeah.
And you came from, you're correct, your parents are immigrants from India?
Yep.
Okay.
Legal immigrants from India.
Yeah, great.
You're from Canada?
Yeah.
Same thing.
My parents are still in Canada.
Come through the front door.
Yeah. So it's and I, in reading kind of like it's kind of part of the times, the elites, like the state and the elites. Oh, all Vivek had was 10 to 15 million bucks. I'm like, are you kidding me? Like that is such a huge success for so many people in this world. Like I just had a real conversation with Jim Bianco yesterday. He said 44% of Americans can't come up with $1,000 or less by the end of the week.
And that's the consequence of, I think, a lot of failed economic policies in this country that we can talk about.
Right.
That's absolutely right. And that was the trajectory I would have naturally been on growing up in Evendale, Ohio, and Southwest Ohio in the 1990s with my dad as an immigrant who came to this country with no money, and my mom in the same position. Mm-hmm. But yes, by my mid-20s, was able to achieve the first rung of success that gave me the foundation from which to then take much bigger steps that I took, later on in my career. And I think one of the things I will say is, this is neither here nor there maybe for our discussion, but people ask me, did you grow up in privilege now, right? Because I've since founded multi-billion-dollar companies and everything else. I didn't grow up in economic privilege, but I actually did have the ultimate privilege of having two parents in the house with a focus on education and instilling in us self-confidence and faith in God. And I think those things actually did provide a stable foundation. And one of the things my parents used to say, they had a couple of expressions, but one was that if you want to jump high, you're going to jump higher if you're doing it from a stable foundation than from one that's shaking. And my dad also had one too. I mean, if you grow up in Southwest Ohio with the last name Ramaswamy, you're a little different than your peers in a number of respects. But he said, if you're going to stand out, you might as well be outstanding. And I think that emphasis on excellence, but doing it from a nurturing, stable family environment was an advantage that I had, that I'm immensely grateful for. Not every kid gets to grow up with that advantage. And to me, that was a far bigger advantage, even combined with having some level of chip on your shoulder, some level of hunger, some level of seeing your family having faced at least, not huge adversity. We didn't grow up poor by any stretch. We're middle class, but at least even a taste of what some level of insecurity looks like in the face of layoffs at the GE plant in the 1990s. Yeah. That actually was, for me, in some ways, in every way, the optimal upbringing that gave me the foundation to aspire, to strive, to succeed in what became an American dream career that followed.
Well, people think, that your courage to conquer the man, or in your case, conquer the establishment, that just happens. Now, our parents instill these values, and they are hugely important. So you can have a chip because you're like, wow, I couldn't quite make it that far in tennis, or I couldn't make it to the NHL. Yeah. But I still have the courage to do what I'm going to do. Right? Yeah. And absolutely. Our parents are hugely one thing that burns me like nothing is kind of like Karl Marx, Communist Manifesto talk of putting people in classes.
Yeah.
Are you a middle class? Like I never thought until I came to America, I never thought of being the son of a firefighter. My mom was a teacher. That I was in an economic class. Like that.
Putting people in any box, for that matter.
It's crazy.
It's an alternative worldview. It's not one that I subscribe to, but it's the same point. To connect both those points, you were saying, well, just because you didn't make it on the tennis court or in hockey to the highest ranks, it's actually a good reflection to say that every one of us has our own God-given gifts. I believe that. Every person here does. You do. I do. They're not the same. We each have a different God-given gift, but every one of us has our own unique God-given gift. And we use words like merit, right? Meritocracy. We can get to this later, but one of the founding principles of Strive, which I co-founded, was that merit should be the sole basis for making decisions in a corporate environment and in our economy. But what does merit mean, actually? Merit, it's a hard word to define. And to me, a meritocracy is a system in which everyone is able to make the maximum use of his or her own God-given potential, whatever that is. Not to say that everybody has the same potential in every area, because we don't. That'd be a ridiculous thing to say. But to say that whatever your God-given gifts are, you're able to make the most of it. And by the way, that you're an individual, an agent, not riding some tectonic plate of group identity, part of the proletariat or the bourgeoisie as Marx would have it. Or even in the modern sense, even though these things are maybe a little more controversial to say, that you're not a member of a racial or a gender category, that you're not riding these tectonic plates of group identity top down, but that you're an agent with full ability and power and self-determination and will to achieve the maximum of your gifts and your God-given potential with your own hard work and your own commitment and your own dedication. And to me, that's the heart of the American dream. That's the heart of what American capitalism is built on. For me, that vision was one of the motivations for founding Strive and even naming Strive. The name in some ways spoke for itself at the time that I founded the firm. And for the story that I've lived, from the companies that I founded to the way that we're trying to raise our kids in this country, that's part of the spirit that I think we need to revive. And that's not a political point at all. I think there's a role for political leaders to play in standing for that national spirit. But I think that this is more of a cultural point in our country to revive those basic ideals of pursuing excellence and doing it through a meritocracy that is not only good for economic growth or whatever empirical argument you could make, but I think is the just system to respect every human being for who they are, and that's what moves me, certainly.
Yeah. I mean, that when I hear you speak that way, I hear somebody who's speaking from their principles, not from a political perspective.
Yeah.
Now we can take any political topic and then crack it open, and you're going to get the left side and the right side. But if you're standing like a rock on your principles, then we can start a company. We can do these things.
Forget partisan politics.
Yeah.
I mean, it can be boring at times. But what are your principles?
Exactly.
Right? What are your foundational principles? And you know what? To the extent that different people have different foundational principles that matter to them, that's fine too. I think as long as we're able to have open discourse, that I think can be a good thing too. And so I quite enjoy and appreciate that. But one of the core principles, there's two core principles that matter to me, and I believe, and I don't think this is contestable, I think are at the heart of the American founding and are responsible for America being the most successful nation in arguably all of human history. I think the first of those principles is that you are able to get ahead with your own commitment without any other government or system standing in the way through meritocracy. Merit is principle number one. And principle number two is free speech and open debate. That no matter who you are, no matter what your opinion is, no matter how wrong it might be, you get to express it as long as your neighbor gets to in return. Mm-hmm. And those two principles, I think, have worked a magic combination on this country. You think about what corporate America is able to have achieved. In part, any company or any asset manager, hedge fund or whatever is only able to succeed if the best ideas win. That's a kind of meritocracy. But that meritocracy can only function if those best ideas can actually be expressed freely and openly. Mm-hmm. And I think that, I'm not one of these people who believes that we have to be at the end of this American experiment and that we're at the end of the Roman Empire. I don't think it has to be that way. But even if it were, whatever other country ends up in the future in the next 200 years becoming what America was in the last 200, I think those will still be the building blocks of any great civilization and country, is one that respects the foundational principle of merit and one that respects the free exchange of ideas, because that's how we make the discoveries and make the advances that allow us to prosper.
Mm-hmm. The risk, of course, is that we're burning down that meritocracy bridge, if you want to call it that, or whatever you want to call it. I mean, we have...
Yeah, we are right now. I don't think it has to stay that way.
No. I didn't come to this country for that. Right?
Yeah.
Like this wouldn't be the magnet, to your point, that it's become for everyone who wants to be an American capitalist.
Sure.
I'm proud to say I have four American kids, and that I'm an American capitalist, and I'm still Canadian, Irish Canadian, whatever I need. It's not. It's the fear is that the Viveks can't go start Roivant. By the way, I did want to get through your lifeline, because I don't think it's fair to have an opinion of somebody until you actually try to walk some part of their path in their shoes. So I wanted to accomplish that. So we did get to you starting your own company, which has meritocracy embedded in the ROI part, right? Like whoever has the highest returns on invested capital, if you didn't know, Roivant, I don't know if that's pronounced that way, you left the hedge fund to start your own company.
Exactly.
You got backed by D. Shah, you got backed by really smart people that wouldn't do that. I hear that quite a bit actually on the street.
The hedge fund I worked for became the largest day one investor, at least, which was a great time. We left on great terms.
It's awesome.
And gave them an opportunity to invest, and they did.
Yeah, so if you don't know Vivek, the politician, but you know him, the human being, up until you actually started your own company, that's a hell of a story, dude. Like, that's really impressive. The risk is that you have Vivek, 20 years younger than you in Cincinnati, Ohio, that's got to go work for the next Jack Welch, the man, and is being, we have a very, very nasty, political and corporate culture that can rain down on people. And if those people don't have parents like you do, they won't have the courage to step up to the man.
Yeah, I think that if they don't have a country that prizes those values, they won't be able to stand up to the man either. And so, for me, look, I every time, one of the things I've followed is whenever you hit a flattening learning curve, that's also at least a good indication to say it may be time to take the next step, right? And so I hit my flat learning curve in the first 3 years, went to law school for 3 years.
That's pretty quick.
Came back, yeah, well, in that case.
Who else did that? Sorry to interrupt, is one of the greatest hockey players in world history. He'd, of course, be a Canadian. Ken Dryden.
Is that right?
He went to Cornell. He went to the Montreal Canadiens, won some Stanley Cups, and said, look, I'm leaving. He's the best goalie in the world. I'm going to law school.
Good for him.
And they're like, can you come back and he did come back, and he won more Stanley Cups. He won more Stanley
That's
Cups.
awesome. I love that story.
But
Yeah,
it's
that
like,
speaks to me.
But
What's
these
his name?
things, Ken Dryden.
Ken Dryden. I'm gonna look him up.
But we're talking about the greatest, some very high achievers.
Yeah.
What about the rest of us?
Well, I think each of us can be a high achiever in our own way. I mean, I truly mean this. I mean, I think there are different gifts that every one of us is endowed with, and they're not all rewarded the same way in the system of free market capitalism, because that's what the skills that end up being rewarded are those that end up creating greater economic value. But I also think there's more to life than green pieces of paper. I think part of what we achieve is not just measured through our financial worth. In the world of hedge funds, it is, because that's the definition of that pursuit, is what maximizes your compounded annual returns on a risk-adjusted basis. But not everything is denominated in the same terms. But whatever it is, you're able to achieve your own self-actualization. I mean, I think that's true happiness, that's true success. Arthur Brooks has written about this, I think, extensively. Earned success is the backbone of true satisfaction and fulfillment and happiness. And it has to be both those things, not just success in some material measured sense of it, but the sense that you earned it is, I think, a part of what gives us our sense of fulfillment. So I stepped down anyway from my job as a hedge fund investor to start this biotech company, observing inefficiencies that I saw from my vantage point as an investor, but I couldn't actually fix. I see a notebook here. You and I both have a similar habit. Actually, has your name on it. That's good. We have a really similar habit.
So that's just in case I lose it, because I need this.
Funny story was, so when I came back from law school, I still had my job. I had been doing law school and the hedge fund job at the same time. Now I don't have law school, I have a full-time hedge fund job, but I have a lot of time on my hands because I had set up things and structured them in a way that left that gap in my schedule. So I tried a bunch of things, but I took up stand-up comedy for a little bit in New York. I did about 10 shows. I took a class at, I think it was called the American Comedy Institute in Manhattan. And that didn't work out so well, but one of the habits, it was fun, I learned a lot. But one of the habits I took away from that was they taught you to carry around a notebook everywhere you go. And especially when something annoys the heck out of you, to write it down and then come back to it later. And their theory was you could find a joke in there. The fun thing is what I started doing at my hedge fund job, where I would take my laptop and I would actually go, type up my notes with the companies we'd be meeting with, but I'd take my notebook to write down the things that annoyed the heck out of me out of that meeting, and many of them ended up being structural failures of the pharmaceutical industry. And that ended up forming roughly the backbone for founding Roivant, which was built on aligning the incentives of drug developers and scientists, giving them uncapped upside in the projects they worked on, which they didn't have in big pharma. If you're the person who discovered a big blockbuster drug, you weren't necessarily participating in that upside. Now, if you took that risk and you failed, you might have a job cut, you might have a budget cut. And so people systematically underinvested in the kinds of risks that were optimal and went a lot more slowly in conducting those trials.
Now they would, you'd probably argue, but this is 2014.
This is 2013, when I was laying the groundwork for it. Well, I think the thing that's different today is there's a much more developed venture-backed biotech ecosystem. But I'm talking about in big pharma, arguably still is the same way today, though big pharma has, I think in part in response to Roivant, has responded by changing a lot of their own incentive alignment models. But Roivant's premise was run a biopharmaceutical company like a multi-manager platform. Given this audience, I can use that word freely, right? Run it like the equivalent of a Millennium or a Surveyor, where every pod in that hedge fund model, think about those as a subsidiary where every one of those drug developers can get project-specific equity in the projects they're uniquely working on.
That's awesome.
Which gives them the incentives to at least align with ownership to be able to get to the answer quickly. And at least you're participating in the upside. Yeah, if there's downside risk, there's downside risk, but the upside actually compensates you for that and your ownership interests are aligned. The long story short, and it is a long story and I'm going to make it very short, is Roivant ended up overseeing the development of a number of drugs. 5 of them are FDA-approved products today. It's a $10 billion or close to $10 billion publicly traded company. It's returned well over $1 billion to shareholders in the process, which is not something that a less than decade-old biotech company actually does. And yet, I think it was just built on not a discovery of nature, right? Most biotech companies are built on a discovery of nature. Roivant wasn't. It was built on a discovery of a man-made problem. And the beauty about man-made problems is that there's always a man-made solution. Problems of nature may not always lend themselves to man-made solutions.
Great point.
But problems made by man can definitely be solved by man. And that was the founding ethos of Roivant. It's really an engineering problem. an engineering problem of incentives and behavioral change in the pharmaceutical industry that led to the creation of a $10+ billion of, close to $10 billion publicly traded companies, return billion plus to shareholders in its short life as a biotech. Most biotech companies don't really meet that fate. And yet, the ones that do are usually based on some unique discovery of nature. This was based on a discovery of a man-made structural problem in the pharmaceutical industry that then gave me the motivation, even after I left Roivant, and I can tell you sort of a little bit of that evolution, to tackle other man-made problems.
Yep.
Like the one that we took on with Strive, which I see as a man-made problem of the politicization of capital markets, man-made problems in our politics and in the way that I certainly view the administrative state is sucking the lifeblood and the original founding vision of our country out of our constitutional republic. I can go into each of those in detail, but the thing they share in common for me is I believe that every man-made problem can be solved by man. And those are the problems that I've chosen to take on more so than other important problems that other people take on, which may or may not be solved, but deserve to be taken on too.
Well, I'd say that ESG would qualify as a man-made problem.
Absolutely.
A major man-made problem.
It is, yeah.
So that, and you didn't have to tell me that. You don't have to tell a lot of people in our business that.
Yeah.
In particular, like if you take somebody, actually what I also brought was, I don't know if have you read Epstein's Fossil Future?
I read an advanced copy of that and provided my 2 cents of commentary before it came out.
Did you put a comment on it? Yeah, you would be the guy to put
No,
it on?
I didn't blurb it, but I gave, he sent me a paperback, one of the advanced copies that the publisher sends out beforehand, and I remember thinking it was excellent. I got my full copy after it came out as well.
Yeah, Teal's actually the first comment. I didn't even realize that.
Yeah.
So there you go. But it's almost like if you put yourself in his shoes or inside of his framework, and you put yourself in the polar opposite, which is that of ESG, you almost can't believe that you're living in America, that there's not an objective, open discussion and debate between the divide of those two things.
Yeah, I think that it's beginning. It's beginning slowly.
It took forever, man.
Well, look, even in my own presidential campaign, some of the things I said sounded like they were outside the Overton window until you actually offer the facts to bring it back. I mean, let's just take the terms of the climate change debate, right? Is climate change real? It's the wrong framing of the question. The question is there a climate emergency that demands us to stop using fossil fuels as a basis for advancing human flourishing? One of the things that Alex Epstein, I think, does a beautiful job in this book of revealing, and I didn't know you were going to come with a copy of that. And so there's some interesting facts, right? If you're looking at human flourishing, what are some factors that might matter? Human lifespan, death rates, those might be things you look at. Well, the climate disaster-related death rate, the number of people who die of a climate-related event, a hurricane, a drought, heat wave, tornado, whatever it is, the number of people who die of one is down by 98% over the last century. Why? Because of technology and advances, building materials, temperature regulation, et cetera, powered by fossil fuels. Now you look at, okay, there's a small increase in global surface temperatures. Okay. Are we sure that's a net bad thing for humanity? Not are there good or bad things about it. On net, that it is a bad thing for humanity, and that on net it could pose an existential risk for humanity. Well, first, if you're looking at the net effect, you have to look at the totality of the effect on life. 8 times as many people last year died of cold temperatures rather than warm ones.
Really?
Yeah, and it's been the case consistently. More people die of cold temperatures, not by a little bit, by a lot. 8 times as many people. Bjorn Lomborg has done the work on this. So if 8 times as many people are dying of cold temperatures rather than warm ones, it should at least raise the question of whether we should have an all-in effort to focus on preventing an infinitesimally small increase in global surface temperatures. That should be a little bit puzzling. Or ask the question of why the Earth is more covered by green surface area today than it was a century ago. Is that surprising? No, it's not surprising because carbon dioxide is plant food. That's what you should predict would happen if you have greater carbon dioxide emitted in the atmosphere in a century, and that's exactly what does happen. So the terms of the debate aren't whether or not there is some level of climate change. Climate change has existed as long as the Earth has existed.
Yep.
It's whether or not man-made effects on the climate pose an existential risk to the future of man, which is the claim that's on offer. And if so, if the proposed changes in behavior are going to be worse or better for mankind, I think the reduction in the usage of fossil fuels is going to be worse for mankind. And I think that's becoming evident. Even in air, I'm looking at a lot of computers here in the backdrop around us. Actually, it's very meta. I see somebody behind you watching me on the screen. So this is an interesting closed loop here. But you look at those computer screens, or look at the increasing demands on data in an era of AI, in an era of, because of Bitcoin mining, you go straight down the list. Things that maybe were the uses of energy. Nonetheless, those energy demands are not going to be fulfilled in an era where we're going after reductions in the use of coal or natural gas, which are the main sources of baseload power generation in this country. And so if you look at the world, are we going to be better off? Is the West going to be better off? Is the United States going to be, America going to be better off with more or less usage of fossil fuels and availability of fossil fuels? I think the answer is it's going to be better off, for as far as we can foresee, with greater, not less, use of fossil fuels. And that completely bucks the trend of the current consensus, which has seeped into even the investing consensus. I mean, if you listen, at least as of a couple of years ago, or even a year ago, they're changing their tune a little bit, but to what the BlackRocks and State Streets and Vanguards of the world were saying, or the Invescos. And why are they saying it? Because CalPERS and the state of New York, their largest clients, are effectively forcing them to say it, is that no, we need to hearken the beginning of the energy transition and the transition away from fossil fuels, to which my question is, what energy transition? We are going to have likely greater demands for the use of fossil fuels to power the directions that we're actually headed. And we shouldn't apologize for that that's actually a good thing, not a bad thing, that we need more drilling and fracking and use of natural gas and coal. And these are things that actually allow us to enjoy a higher level of human prosperity, human flourishing, human lifespan than we do in a world without access to those same fossil fuels. And I think that as you see that consensus begins to shift, it reminds me of a contrarian view that I had in a very different domain, the realm of hepatitis C therapeutics.
Yep.
Nucleoside polymerase inhibitors were going to be, despite the fact that the consensus view amongst the managerial class in pharma and in the investing world in pharma was that no, it had to be protease inhibitors and it had to be a different class that was, for whatever reason, it was mysterious. It became almost a religious quality about it because the first front runner became a Wall Street favorite or whatever. Vertex Pharmaceuticals at the time had a protease inhibitor, and a small company called Pharmasset was, less than 5% of its market cap, was developing this different mechanism. The expert class in this country has a way of digging a hole for itself and then really finding it really difficult. The more you dig yourself into that hole, the more committed you become to staying there. That's effectively what's happened with the climate movement's claims with respect to fossil fuels. The more they've dug themselves into that hole, the harder and more pot committed they become to it. And I think a contrarian view today, it seems intuitive to me. It seems intuitive to people who have read Bjorn Lomborg's or Alex Epstein's work, or even Steve Koonen's work, who's a physicist from the Obama Energy Department that wrote a book called Unsettled, which alone in its title provoked a little bit of a reaction that tried to suppress what he had to say. It's a contrarian view, but you know what? That's how people, that's one of the best lessons I learned, is that you don't make money or generate alpha from running with the pack. You got to be contrarian and you have to be right. Both of those things have to be true. If you're right where the rest of the pack is right, what's the fun in that? There's certainly no alpha in that. If you're contrarian but you're wrong, okay, well, there's no win there either. But if you're contrarian and you're right, that's been, for me, the formula of getting ahead in every step of my career as an entrepreneur. And I see some of that even in the realm of this current climate debate, is to say that we have the most obvious thesis hiding in plain sight, laying out the thesis in this book. I'm not just talking about investing, I'm talking about for society, that greater, more abundant, plentiful access to fossil fuels is going to be a requirement for the future of human flourishing. The facts are crystal clear about it. And yet we have an investing consensus that at least for the last decade, if not decade and a half, has been hostile to actually drilling and fracking for more fossil fuels. And so I think that that's a seismic shift waiting to happen in the next 10 years to match what are unavoidably going to be increasing, not decreasing, global energy demands.
It's a very good example of a man-made problem creates supply deficits and then creates an inflation problem. And capitalists, like me, are on the other side. We're long everything that's not locked down, from lumber to copper.
Is that right?
You don't need to, or energy obviously. DRLL, which is Strive's ETFs, up I think 45% since the commodity cycle bottomed at the end of last year. There's been a huge move here against the experts. The experts being the Federal Reserve. Oh, oil just went up 27% in 3 months. That's just a little bumpy, I think is what they called it. So you have an opportunity here, instead of listening to the government on inflation, be long inflation. That's probably the number one differentiator right now in terms of, you talk about alpha. on a 3-month basis. Now at a hedge fund, it might be a 1-week basis you're looking at, but really, if this is the start of the next wave of inflation, you cannot not include the man-made problem of ESG into that problem. And if you're the holder of inflation, then perversely you're actually satisfied that these yo-yos had the impact that they had.
And it's a different hat you wear as a would-be policymaker or political leader, which is what I was running to do for the last year.
Yes, than making money.
Versus a capitalist. and I've been on both sides of that, which is, on one case, you look at this and say, this is a lost opportunity for society because we have the wrong policies that are creating these market dislocations in the first place. Now, as a capitalist, I know many people who are in this position to say, yes, this is senseless, but the best I can do is at least capture the inefficiencies that result from it. And you know what, that is a kind of check on the policymakers too. It's the beauty of how democracy and capitalism work together. When there are failures that come out of the democratic form of governance, that at least creates the kind of dislocations that market actors are able to check and serve as a litmus test to reveal. And it's their own profit interest to be able to capture a lot of those arbitrages that result from it that actually play a role in correcting the effects of those policy failures in the first place. And so, I've been on both sides of that, and I think that there's a different hat to wear. In the short term, and there's a part of me that's more satisfying to say, all right, well, if the system's this dumb, then at least we can do the right thing and make money while we're at it. There's no shame in that. But I'm also at a phase in my life where I've lived the American dream. I'm most interested in passing that on to our kids, and I don't think it's going to exist for our kids unless we step up and do something about it.
Yeah,
so that's the phase of career that I happen to be in, but no shame. To the contrary, still be proud of every investor like yourself or person in the investment world like yourself looks at those market dislocations, you could say from inflation to the future projections for what the requirements are going to be for fossil fuels, to say that I know the government's telling me this, I know the managerial class is telling me this, but here's what the facts say. And so thank you very much for your input, but I'm still going to take the other side of that trade. And the fact that you're foisting that information onto the rest of society, as bad as that is, at the national level, still creates a unique opportunity for me to not only be right, but to be contrarian. And those two things together are what actually create investment outperformance in the long run.
It's perverse, but it is capitalism, where 10% of humans don't have electricity.
Yep.
Right? That's inside of 1 billion people. That's a lot of people. 1/3 of human beings generate, they use cow dung or wood to generate.
Which, by the way, is far more corrosive, just from an environmental perspective, for burning wood or cow dung.
But the real oversupply in cow dung I wrote this morning is in
politics.
Yeah, and 785 economists at the Federal Reserve that are paying.
That's
a
real
real
cow
joke.
dung. I appreciate that.
That is just
that's the cow dung we need to burn, and it wouldn't even result in bad effects or breathable air.
Right, exactly. And I only have a minute or two left here, but. What do you say? Actually, let's end with this topic of the Federal Reserve. An unbelievable amount of power for an unelected body. Let's just set aside the incompetence.
Yeah.
70% of their forecasts are wrong, and they're really wrong at the particular point in cycle time, as Mandelbrot would say, that you better not be wrong.
So I find it utterly bizarre. Let's say you were from another planet that in all respects was the same as planet Earth, except that planet had a United States of America in which there was no U.S. Federal Reserve. Then you walked in here and you see some of the most sophisticated market actors and smartest people on the planet reading from the minutes of the transcripts as though this is some sort of pope divining some sort of smoke signal that you send from the top of the Vatican, as though this is a holy man speaking. Not because they know something more about the economy that we don't, but really market actors are looking just to how the Fed is going to screw it up next.
Yes.
And I think it is such a bizarre world in which these self-appointed members of the managerial class of that economic bureaucracy at the Fed, which became really overtaken by a class of managerial bureaucrats posing as academics in the late 1990s, reinforces their self-importance because of how much the market pays attention to it. Yet the market pays attention to it not because they have any unique insight, but because they have an impact, and often a destructive impact, on the underlying markets themselves. So a couple of basic steps I would take. First of all, this idea of the Fed offering these divining smoke signals as though they're sort of soothsayers speaking in voodoo. End that. Just be transparent. Here's what we believe is going to happen. Here's what we're going to do. That would be at least a first step. That wouldn't be my ideal world, but it's at least a step better than the one we're in now. Let's move further towards an ideal world. Restore a single mandate for the U.S. Fed. Stabilize the U.S. dollar as a unit of measurement, period.
That should be the sole job. You don't need 23,000 employees at the U.S. Federal Reserve to do that, which is what they have today. You could have a 90% headcount reduction and you'd still have too many people to carry out that narrow responsibility. That's what I would do to at least put the Fed back in its place. Then you could talk about a longer term discussion of whether a Federal Reserve is even needed, but at least restoring a single mandate for the U.S. Fed of dollar stability is, I think, good for economic growth in this country. Think about capital allocation. It's wild if the dollar is as volatile as it's been. With the backdrop of a stable dollar, you have more efficient capital allocation across an economy. Mm-hmm. You have a Fed that's taken, I mean, you get in the weeds a little bit here, but taken a leading indicator of inflation, they will say, is rising wages. Now, anybody who's run a business knows that wages are often the last thing to go up in the business cycle. But if they're treating wage growth as a leading indicator, they're playing whack-a-mole to wage growth, which actually tightens monetary policy into what was a natural downturn in the business cycle, which is a double whammy, which gives us a boom-bust, and then what comes after a boom and a bust, a bailout. Mm-hmm. A boom-bust bailout cycle that could have been avoided in 2008, and to some measure, even the smaller scale that we had in 2023. So I think the Fed has done arguably more damage in the last 25 years than it has done good, just as I think our anti-fossil fuel policies have done for this country. In the name of doing good, has actually done more harm than good. But I'm not here to sit around and complain about it. I'm here to sit around and do something about it.
Good.
And that's what I tried to do through some of the economic policies I advanced over the last year. I think a lot of this change isn't going to be driven through politics. It's also a big part of why I founded Strive, to compete against those incumbent financial institutions that take those orthodoxies from the role of the Fed to the ESG movement as a fixed dogma, and to question those dogmas and say, you know what, maybe we should just return to the base principles that American capitalism was founded on in the first place. That every company and every financial institution should pursue its own unique mission, maximizing value without apologizing for it, which was different than what every major financial institution at the time was saying at the time that I co-founded Strive a couple of years ago. But I think it does take people who are willing to buck that trend, to engage in that form of free speech that I talked about earlier, unsparingly, to move back the terms of debate to where it once was, and I believe should be, on how do we maximize value rather than the question of whether we should maximize value, which is really where the terms of debate were as recently as a few years ago. And so, I'm proud of some of the things we accomplished, certainly in the presidential run. Didn't achieve the goal that I set out to. We set out to achieve that with one goal, to lead this country, and the beauty of this is the people of this country get to decide who that person's going to be, and this time around that's not going to be me. But I'm also proud of the changes that we've been able to drive through the private sector in starting companies, and I'm proud of a lot of the impact that Strive has had on our economy and on our corporate culture in this country, which is going to be required for sectors from the energy sector to really any sector to thrive, to say the best ideas win, the best person gets the job regardless of skin color, and you know what, we don't have to flog ourselves for using fossil fuels. I think that's the way the winds are already blowing in this country, and I think those who understand that will, I think, be hopefully rewarded for it.
Really good, man. I didn't know how this conversation was going to go, but in principle, I get it. Now I get why last night at a lacrosse game, another Yale guy, he's definitely on the left. He said, "You're talking to Vivek tomorrow, right?" Mm-hmm. I said, "Yeah." He said, "Really smart guy." He didn't talk about how you're a bad Republican guy.
Yeah.
And now I hear it, I see it, I listen to it, and I don't have to say what I just said. And I'll just end with this. I'm very happy that chip that was on your shoulder since you left Cincinnati, Ohio, is probably still there after what you just went through politically. So, and you're still young, so you got a lot of time on the clock. So good luck.
Thank you, man.
Yeah.
I appreciate it. It's a good conversation, and keep at it. And tell your friend, we don't have to agree on everything. Your friend from the lacrosse game. That'd be weird if we did.
Very
but
weird.
I think all we need to do is restore that sense of mutual respect for one another, and I respect somebody who can, like your friend, take that attitude. So I appreciate that.
Cool. Thank you very much.
Thank you, man.
I appreciate it.
Take care.
He is Vivek Ramaswamy. If you have not gotten to know him, I think you just did. Thanks for joining us.